Good evening, all. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening of Thursday, and we're sitting here now on August 17th, 2023, and the time will get on to 5:35 p.m. Central Time. I'm a bit early, but it's the dog days of summer. As you know, before we get into anything here, I did put out a special report for everybody, and my reports are only up 3 business days, so please remember that. This report is on interest rate futures, and it's really important because I show you so much of chart and trend analysis. You'll get my commentary as I'm talking in the video, but you're going to get price counts. You're going to get the seasonal charts. I'll show you the 5, the 15, the 30-year. We're going to cover bonds. We're not going to go to the notes, and I thought that made sense, given they're only running 10, 12 basis points higher, if you think about it, than the popular 10-year note. And this, I thought, offered a good idea. And it will show you what they do. And to see that the market is coming down hard over the past period of time here, and I think there's more coming yet. I don't think we're anywhere near it. You'll get bounces along the way. See why I think that. So how do you get the report? Go to irepstein.com. Go to the research section. You'll see it right there. You can move at any point your clicker right up here. That will take you there as well. You can always call my staff if you have any other questions. Again, 3 business days. So we put it up yesterday to today to tomorrow, and Monday it's gone. Does that make sense to you? I hope so, because that's how they work. I hope this one turns out as well as the one that I did in the stock indices about a week and a half ago, because this big break we've had is exactly what we were talking about. And I pointed out that it's not only August. September's not a friendly month for stock indices either, at least the beginning of it. So be very cautious through all this. Yes, I know the markets will get overdone. They'll give you bounces. Gold has gotten overdone. There's no doubt in my mind. Does that mean that it's ready to turn around? I don't know that that's the case, but a bounce is in the cards. Even the silver did that. Copper, not going anywhere. It needs China to do something. But the platinum market also came alive. The dollar index was up, but tonight you're seeing most currencies rally a little. So we're coming to the end of a big break. We've got the weekend ahead of us. There's probably a theme here where some traders that are short are going to take some profits in markets. Don't be surprised by that. But what has changed? Not an awful lot. Now, I did hear on CNBC that Fed Chair Powell is scheduled to speak on Friday in Jackson Hole. So if he is going and if he is speaking, I promise you all eyes will be on that. Remember, you're getting into the end of the summer mentality. I sent out today to my clients the schedule of the Labor Day holiday already. So it gives you an idea how close you're getting, and people are thinking that. Plus, people that want to take their end of the summer break, they're doing it now. I had to go out about an hour and a half ago, and the streets are crowded in my neighborhood as people are at the pizza places and all over. So you can already see that mentalities here as the last days of summer start coming to an end. That doesn't mean the weather changes dramatically, but the mentality changes. The kids are back in school. Work gets a little more serious. All that takes place. When we look at gold, you are now down 1.5% for the week. So this break happened. This one rally attempt at the 18-week average of closes failed, and the market has paid for it. When we take a look at this chart, this is a rubber band. I don't predict bottoms. That isn't what it is. The trend is down. Will we get a bounce? You can count on it. Where it'll come from? Come out of left field. Who the heck knows? The pattern is one of lower highs, I've marked the arrows, lower lows. Are you aware that every time this occurs like this, it means you've had a lower and low? That's unbelievable. So this is a market that, let me step back here. Show me another pattern like that. You don't have one. This market just took all the air out of itself because it can't fight interest rates that are 5.25%, and you're telling people to own gold. And the government is fighting inflation at the same time, and the dollar's going up. That's what you're dealing with. It'll find a level that it's comfortable with. Something bearish happened today. Now you've got the 18-day average of closes in red underneath the 200-day average, the gray average right here, as you can see. The market's still running the lower Bollinger Band. You know, I call that the gorilla glue trade, when almost every day you're hitting that lower band. And notice how markets pay attention. For those of you that don't understand Bollinger Bands, I don't know why you're watching me. Because I really believe in them. I put them on the charts. They are just one of the tools. By themselves, I don't like them. With the other tools, I love them. And that's what I had learned. That took me a decade to figure out. When I did it, I went, uh-oh, the light went on in this old guy's brain. And it was all about how do you lock in the momentum here with it. It tells you what to do on rallies if you're trying to get short this market. And it also keeps you honest, because you're going, that's the strongest bear signal there is. When will a correction happen? It's easy. When the red line closes over 21, the odds favor you'll then try to get a correction that runs up to one of the moving averages. Where they'll be at that time, I can't tell you. Right now, it's 1962. Each day that goes by, if we take a look at this, you're losing approximately $4. 1971.70. I'll just give it a current 1966.90. Right now, 1962.20. So that just gives you about where they're at. So it gives you an idea through all that. When I look at the gold, silver markets now said, I'm ready to correct. Now, how far this correction goes will determine if silver has bottomed or if this is just that, an interim correction, because the market should have difficulty getting and staying under 82.21 if silver is going to continue to lose to the gold market. You have not lost the embedded reading until the red line closes over 21. The bears are still in control. You had today an outside day to the upside. You will have a failure on your hand, in my opinion. Doesn't mean I'll be right. If today's lows of 22.39 are taken out, if that happens, I will be surprised if you don't make a run for that lower Bollinger Band before you go back through the high up there. But what if you don't go there first? Well, then the question is, do you keep the embedded reading and the market just runs itself out of momentum here? This dictates the day, not this. What the market is saying is if you lose the embedded reading, the market's likely to want to run up into this resistance if you lose it. If not, this is a bounce, and the question is, does it take out Friday or Monday the lows of today? In the copper market, you're running the lower Bollinger Band. Same thing, that gorilla glue trade. You're embedded now. It's the same things. So good rallies in these markets will be selling opportunities. I teach this in the charting course on the enhanced Bollinger Bands. And until that runs its course, I'm just looking to say up here, hey, get a good rally, see where the slow stochastic reading is with it. If it's not lost, that's where I think the traders will come in. And by the way, you don't have to pick it. There's a key moving average that I use that's right on the chart. It's all in the course, and that is the number you're always looking at. When I come to the platinum, outside day to the upside, just like in the silver. So I'll be looking at today's low, Thursday's low in this. If it's taken out, I expect an immediate test of the lower Bollinger Band. If it's not, and if you can't lose the embedded reading, this is no more than a short-lived rally that could have legs back to the downside. We're at a funny spot in all them. With Friday coming, I can see that there's going to be profit taking, but I warn you, I don't want to see the lows of today taken out in platinum or silver. Then I think you can set up a trap for the bulls. In the dollar index, you have the embedded reading at work. I'm a broken record with this. It's just it's so simple to understand. And when that sets in, which it's done, I'm looking for the dollar higher and higher and higher. And no, I am not looking for it to get through that Bollinger Band and run. Can it? Most certainly can. Take a look if you want to see a market that was going sideways and fell apart today. Take a look at your Bitcoin. You see how it fell apart in the marketplace. So I look at all that. I look to see just what's going on in Bitcoin tonight. It's coming down again. So it's down $1,500 more tonight. So it's getting itself really beaten up here as traders are bailing. We're supposed to hear something soon on some big law cases to either get this ETF going or not. I think it was Grayscale's got one of the cases that's supposed to be decided. Haven't heard it on Bitcoin yet. I want to remind you, take a look at the reports that I've got. They're only up, remember that, they're up for 3 days. That's it. You're already through a full one of those. IraEpstein.com, under the word research. When you go there, by the way, if you don't want to do it that way and you're near your computer screen, just move your cursor up to the top. You'll see an icon and away you go. I'm Ira. I'll see you tomorrow. Have a great evening.